Hi, thank you for joining me. Welcome back if you are a returning viewer. Really appreciate your company and your support. If you are new to the channel, please consider subscribing and stick around. You might learn a thing or two while you're tuned in. It's been a very busy couple of weeks. I didn't get to post a video last week. Hanover Life Re actually announced that they are exiting the group insurance market and refocusing on their existing reinsurance arm of the business. The insurance and supercoded practice code owners also announced that they are deferring the effective date of the code's implementation, which will now move from 1 July 2021 to 1 January 2022. And also, finally, the enforceable code provisions, which is part of the Royal Commission Haynes bill that was tabled in Parliament on the 12th of November, actually was aired on the 10th of December, and it looks like it will become law. It's just waiting for royal assent. So they will make quite a significant difference and progress to some of the things that we have been covering off in this channel. But today we are talking about the research commissioned by the Australian Securities and Investments Commission and was released late in November, talking about how funds can improve member engagement within insurance in superannuation. The report was done in July 2020, but it was released just in the last week of November. And as usual, I have prepared a whiteboard video to share some of the insights and some key points from the research. So let's dive right in, and I'll see you at the other end of the video. The research is catalogued as ASIC Report 673, and we're focusing on 8 of the tips highlighted from the report to help improve your experience as a member when engaging with your superannuation fund. These tips are based on the report released by the Australian Securities and Investments Commission and was prepared by Susan Bell Research. The report highlighted some potential improvements that funds can adopt to improve consumer engagement in insurance and superannuation. Tip number 1, helping members understand insurance. The research indicated that just because a member is engaged doesn't necessarily mean they are knowledgeable about it. Some members didn't even know what type of insurance policy they had. You will see here that I'm comparing the types of cover you can access within super, like death, terminal illness, and TPD cover. Income protection also comes with varying durations of waiting period and benefit period options. There are also considerations to be made on how the cost of your insurance will be taxed and contribution caps when you decide to have insurance inside or outside of super. Insurance is a complicated product. Helping members understand what it means to access this inside or outside of superannuation will be helpful. Funds should explain this and also the impact of members' changing lifestyle on their insurance needs. Tip number 2 is all about calculators. Funds are being encouraged to have a calculator to help members decide how much insurance they need or how much it's going to cost them. There are lots of free insurance needs calculators online. Even some of the larger funds don't limit access to their calculators to just their members. Insurers also have a needs calculator. If your fund doesn't have one, they can simply point to a link to a non-affiliated calculator online to make it easy for you, including one from ASIC's MoneySmart website. Typically for income protection, you'll only get a replacement ratio of 75% of your salary, leaving you with a shortfall of 25%. This shortfall should guide your thinking as to how much TPD cover you need in case your disability becomes permanent. Once you determine how much 25% of your salary is, multiply this by the number of years you have left to retirement. Then consider if this is the right amount of death and TPD cover you need, given your current and future financial commitments. This is where a licensed financial advisor can assist. If you want me to do a video on this, please leave a comment below. Tip 3 is about reminders. Your fund should remind you regularly to check your insurance, whether by snail mail or via email. Just like an annual medical check, you should review your insurance each year to see if the amount remains appropriate. You may not even need insurance anymore. If so, you can cancel your cover at any time. Just make sure you have given it proper consideration, because you may not be able to get your cover again under the same terms if you want to be covered again later and your health condition has changed. Tip number 4 is about case studies. Funds are being encouraged to engage not just through formal product disclosure statements, but through a journalistic style of communication to help you understand how you can adjust your cover or cancel it altogether. They may also be able to share some case studies as to why insurance claims have been declined in the past. And there are many possible reasons for these, ranging from non-disclosure, not meeting the definition of TPD, losing cover due to PYS, or not being eligible to claim because the date of your injury is after the date you left your employer or the fund. It's easier to learn with added context. Providing access to links to some published self-help or fact-finding material would be useful. Tip number 5 is about encouraging customer support staff to guide members. Some members enjoy the online self-service experience, but not all funds websites are easy and simple to navigate. If you want to cancel your cover or make changes to it, funds are encouraged to add value by helping their members navigate their way through the fund's website. Some funds already do this, but not consistently across the industry. Having a website online capability is not enough. A quick walkthrough to help navigate the landing page and where to find key insurance information will go a long way in improving members' experience. Tip number 6 is about demarcation between general information and advice. Some members don't even know what questions to ask or where to begin. Therefore, they are reluctant to speak to a financial advisor. If the call center consultant can't assist, members feel they have to do their own research to get their answers. It would help if members understood the demarcation between general information and advice. Tip number 7 is gaining access to advice. The research indicated that some members may want advice but not use that terminology. They're not necessarily familiar with the word advise, delivering a more bespoke outcome, or they don't understand how the fund can help them with taking things further. This can result in inaction or not having the intended outcomes from the initial touch point. Transparency on gaining access to advice would be helpful, particularly if there is a cost involved when taking it to the next level. Tip number 8. Finally, it is worth promoting MoneySmart. It is a tool that ASIC has created to improve financial literacy for all Australians. It is free, it's independent, and it's not affiliated to any particular insurer or fund or advisor. Hopefully you got something useful out of those whiteboard video decks. Just to be clear, these tips are actually not for you as a member. The tips are for superannuation funds to improve the way they engage with members of superannuation funds like you and me. But it does help that you understand what the regulators are doing to help our funds help us. That's it for today. Thank you again for your company. If you found this useful, please consider subscribing or giving it a thumbs up. And I hope you'll connect with me again in the next video. Bye for now.